Good morning, Academy 55. David Kahn here on Wednesday, the 5th of February 2025. It's now 4 minutes to 10 in the morning down here in the UK. Looking at the EUR USD on the 1 minute time frame, primarily on the EUR USD. So, as you can see, we are having a steady incline on the way up. We are in between zones on the 5 minute time frame. But what we'll do first is we will go and have a look at the bigger picture. So if we go on to the daily, remove all those drawings first so we don't confuse ourselves. And on the daily time frame, we can see pattern of consolidation. Quite a big area though, isn't it? Obviously, 74. Yeah, it's a 50 pip area. Or no, 250 pip area. So that's quite enough area for us to play in. But we can see sideways movement. We are currently on the up as far as the EUI USD is concerned. Yesterday, as I said, the EU wanted to push up and it's still continuing to do so. So, bit of indecision the day before, bit of indecision today. So let's go down to the 4 hourly. Indeed, we have filled that gap that was filled at the end of play on Friday to Monday morning. That indeed has been filled like any other gap, like a FEG, fair value gap, needs to be filled. And now we're getting back to last week's levels after the tariff incident from Donald Trump and all that. I guess that's what that is. And now they're recovering a bit. A bit of more confidence is coming back in the EU. We have a tiny bit of imbalance on that candle there, so it's heading up to equalize, go up to here at least and tap into that imbalance. But that's a little bit far away for us to sort of acknowledge today. What we could do instead, get a trend line. Draw a very rough, very rough trend line from there to there. So if price goes below there, we can say that things aren't so good for the euro anymore. And also, we could build ourselves a trend line like a channel from there to there. But as you can see, that's a long way off yet. So we could be trading anywhere within this channel, but that's not so important really. Just a rough idea of what's going on the higher time frames. Put it on the line charts. Any areas of importance to watch out for? Well, just here is a significant area, just about there. It's been hovering, price has been hovering along here as support and along here as resistance. And that's quite close to where we are. So that's a significant area to look for. Getting even closer to that now and going down onto the hourly. We could raise that just a smidge. We've had several touches along here on the hourly time frame. And just where we are now is quite an important area for the price to break free from, because there it stayed there for quite a while. We've got a touch there, we've got a touch there, so that's good enough for our purposes. And several significant touches here. So that's in just here, areas for us to look at. Touch there, touch there, touch there, touch there. So that area there is a significant area to look at if price ever gets down to that sort of up to that sort of area, if we're in a trade or anything. So we come down to, we put it onto ordinary candles now. And this is where we are on the hourly. There are no significant, well, there is significant imbalance down here. Price might wish to retrace and get down to these areas down here. This area here. And also, as you can see, this area here is a significant area. It's been touched several times. So it's prudent of us to get a horizontal line and put a line there as a place of significance. But that's quite a lot of noise there now. Too much, really. But these are all areas to look at if you're in a trade. If things start stalling along any of these lines, then you know to either pull out of a trade, put your stop loss into your entry, or ride it through, and you won't have, you'd have a little bit of an idea of why price is doing what it's doing. Like, for example, if it stalls there, is it gathering power to tap into this imbalance here? Because it needs to get into that imbalance at some stage. Anyway, so that's that. So we go down to the 5 minute. And now we have all these areas where price sort of respects, stalls along. We have now we get to mark up our zones so we can see it on the 1 minute. I try not to make it look too many lines and all that, but these are all, as long as you understand what the lines are for and what they actually are meaning, then that's the important thing. So there's our horizontal lines. We want confirmation of buys, and we pretty much, price wants to buy because we saw it on the bigger candles. So buys is more prominent than sells, but we've already been into the buy zone there. This, don't get me wrong, this might develop, if it goes along a bit more, this might develop into another buy zone. So buys really is what you got more of a good idea of a buy than anything else. So we'll put our indicator back on. And here we can see the purple line, the EMA 462, that's within the indicators. And we're above, so that's a further confirmation of buy bias. So indeed, buys is where we want to be. So we have a bit more confidence of taking buys than we would sells, although sells are not out of the picture. So this is the scenario for buy. If I because the buy alert is the next one on. What am I doing here? Sorry, I've got the wrong thing. Trying to talk and do things as well. Long position tool. I want to be a minimum of 2.2 pips, 2 to 1 up there. So this is the scenario for a buy that we'd like to. Actually, it's on the trend line, isn't it? There, so there. That's the sort of scenario we'd like to see for a buy. And we've got the sell zone up here. So, and we've got that support and resistance line. So we will be in the wait, I don't know why that happened. So we will be within the range if a buy does happen. Now we've got a volume. So time to look at your MT4. Make sure you've got your risk to reward in purple, your lot calc in purple, and you got that all important 1%. And I like to keep this rectangle on in case I need to close all trades. I want a minimum of 2.2 pips. So I write 22, that means 2.2. Put that in there, put your lines on, and I'm now in the position to take a buy if one becomes available. If I wanted to sell, you press the R there, and then your stop loss goes above the entry. Press the R again, and then your stop loss is below entry. Full training for this is in the back office. So we are in our junks position, and that is to wait for a buy or sell trade. If one displays itself. But it's like I say, it's very nervy action here. Really, it's a ranging market, really more than a trending market. And ranging markets are more dangerous to try and trade. So that's why, well, as always, we should look for as many confirmations as possible, possibly longer stop losses. Right, so we've got a buy there, but I'm waiting for the trend line. The trend line's nowhere near green yet, so it might possibly be quite a long stop loss to entry. We did have the buy there. We got a buy back again, but I'm waiting for confirmation. So I might be up to 5 or 6 pips between stop loss and entry before I get into the trade, because we're in a ranging market. We're not in a trending market. So I want to see, like, for example, at least get above all this noise here before I'm in the trade, because otherwise it could be quite a significant area because it's had several touches and come down again, and then we might even go lower. So you want as much confirmation of a trade as possible. The trend line could go green if price gets above there, and that's where we want to be really with price with the candle for as much confirmation for that buy as possible. And if the price does get up there, not only will the trend line go green, but we'll get that more permanent buy alert. But as you can see, it is a ranging market, not a trending market. Range, bit of a push, range, bit of push. So it's a very nervy sort of rangy market, not a trendy market. We like a trendy market, even on smaller time frames. But it is what it is, and we act accordingly. Every day's different. So I'm glad I didn't jump in now because we're ranging down. And this might come to nothing. Looked promising 2 minutes ago, but now not so much. And it is a ranging market, and it is what it is. From your perspective, the trick is to, well, not trick, but the thing, the experience will be to um, have enough confidence to say, well, this is a ranging market, a bit more difficult for trading. Do I come back later on? Because you want to keep your equity and not gamble it. It's more like gambling in a ranging market. If you don't wait for the confirmations, that is, you've got a bit more of a chance if you wait for the confirmations, but you have to accept the fact that you will get to your target a lot later and have the patience to do so. So now that's where we are. Glad I didn't take that on a whim because I would have surely lost by now. Because the buy alert disappeared. Trend line isn't even green. It is sort of horizontally off, ranging again, So this is not a good time to trade, to be fair. But we're here to we are here indeed to trade because that's how we make our living. But I'm trading it off against a bigger stop loss because I'm waiting for all these confirmations of indeed we are, although we are ranging up like we were here. But by doing that, you've got to accept that you have a larger take profit. So, while we're waiting for things to happen, I'll keep an eye on this. So let's do this. Keep an eye on this. It's a scenario we want there, like that. The problem being is that we might. Right, I'm glad I didn't. Right above there, remember? Looking for that. Right, I'm in for a buy. Hopefully we will it'll come good. But it's a ranging market. Oh boy, is it ranging. So really, it's if we are in this, we have to accept that we will see. We all of a sudden we might have a volume spurt. Hope, and that's the hope that we do that. But in this rangy sort of market, it's a bit more of a difficult trade. So we have to be big boys and girls and accept that we could have a 1% loss, but obviously the price is a 2% gain. And look and also respecting the fact that we are in a rangy market, but it could be ranging for days and days and days. Maybe we should go after 1% rather than 2% and not push our luck. Or get up to this area here. If price gets up to this area here, say, you know what, we'll put our stop loss to our entry and accept a break even if it comes down the other way, or there might be a push depending on the time of the day that they want to put more volume into the market. There might actually be more volume to push us on. But I'll be waiting for if price gets to here to protect equity. I'll be waiting for price to get to this area here, and then I will be putting my stop loss to my entry, being cautious, and then you've got a risk-free trade for the rest of it, and that will be a good thing to do for me. Other traders will lie back and accept the 1% loss because we have got a 65, 70, between 65 and 75% win rate. But right now, for example, I'm going to put my stop loss to my entry. And if it comes down, and because of the ranging conditions and all that, I'm fine with that. A break-even day. From the conditions I'm seeing with price and all that, that's not bad at all. Some people might even decide to take that. In actual fact, I think I will, you know. I'm going to take that trade right there. Oh, what we're done. I accidentally pressed buy. Sorry, yeah, I do apologize. See, I made a mistake. I actually pressed that one buy instead of close. But now I did close it and I was about 1%. And I'm happy with that, you know, in the current conditions of this trading around along here. I'm happy to take that 1%. So I'm 1% up for the month already. That very well may carry on up, but it's had a big volume push up already. And we are at an area where it came back down again. And price tends to sometimes work historically. And indeed, it did get up to these heady heights, and then it came back down. So is it doing that again? So that's why I did what I did and took the money there. And I'm happy with that decision. So what we're going to do now is I'm going to open up the chat for everybody. If anybody's got any questions about what they saw, my mental attitude towards trading and all that If anybody's got any questions, please let yourself be known on the chat, and I will do the best I can to answer any for you. Right, so what happened there? I had a bigger stop loss, didn't I? As you can see, it's going even higher now. These are the breaks, but under the conditions, I'm very happy doing what I did. I took a profit, and you don't go broke by taking a profit, but that's the conditions. That was assuming a 2.2 stop loss, but we actually had a 4 pip stop loss. So indeed, that's where I took the money there, about 1%. And because of the rangy conditions and all that, don't want to push it too much. 1% is very good. I have trouble showing, Raj says, I have trouble showing all the gaps. The gaps. Okay, right. Okay, well, yeah, I think you mean the end of Friday as opposed to Monday. So I've taken my trade there, but we'll leave that there just for something. So we'll go back on the 4 hourly, take the indicators off. Ah, right, there we go. There's the gap. That was Friday. That's close of business on Friday. And this is Monday morning. What is your account size? It doesn't matter what my account size, Mike. Everybody's different. Anyway, so Friday night, markets close. We had all that noise on the weekend. The markets disseminate the information, so that's why they opened a lot lower, creating a gap which needs to be filled just as much as FVG's fair value gaps and imbalances need to be filled. So I hope that's a good enough explanation for you, Raj. I don't think I can make it any more clear than that. So, did I do the right thing? Maybe not, but that's hindsight for you. Let's go down to the minute again. Indeed, we've gone all rangy. Can I show other gaps, please? Right, okay. If there is any. So look, we have to go on the daily for that. There's not always a gap, see, right? So not always there's never not always a gap between Friday. Oh, put it on. There's not always a gap between Mondays and Fridays, and also they usually fill them in within the week. So the answer is no. I can't. Oh, imbalances, right? Okay. What should we do about that then? Go on the 4 hourly. Right, we got that marked out now. So trying to make it a bit, what? Right, so here's a good example. Yeah, we're on the 4. All candles work differently on different time frames. So what did I just say? No, that's completely wrong. All candles work the same on all time frames. It's just you got more confirmation the higher the time frame. So this is an imbalance here that needs to be filled at some stage. And it took, well, this was on the Monday, the 25th of January, but it took all another 7 days for it to be filled. But indeed, that imbalance was filled. Um, yeah, well, I don't understand what else I can say to about that. Don't get hung up on imbalances too much, Raj, because imbalances like the support and resistance lines are just another point of interest. Like we have an imbalance here. We know price needs to fill that eventually, but it could take a week or even a month for it to. But if it's anywhere near our trade, if we was in a trade, it was anywhere near that, and we knew that there was an imbalance there. We know to keep an eye on our price a bit more and protect our equity, but don't get hung up on that too much. So I took my trade out here. Let's get this pointy thing. This area here, respecting that area there and respecting the fact that we are in a rangy market. So I thought, you know what, I'm quite happy with just 1%. So that's indeed why I did that. But I wouldn't be surprised if eventually we do get our 2%. But because of the ranginess of the market, the nervousness of the market that I'm seeing, I'm quite happy to be there. What some people would do is, well, like I do normally, if I'm not live trading, I would literally just walk away and accept a 1% loss or a 2% gain. But seeing as I'm here with you guys, I have to watch the trade, watch what it does. It's now a sell zone. So that. What's now a sell zone, Raj? We're not. No, we're not in any sell zone yet. We haven't got a sell alert. So, yeah, I was debating for a long time when we first started whether to actually show you these lines. So please do not get too hung up on these. These are just points of interest if you're in a trade, so you can have a better idea why price does what it does. You've got a sell zone on the 5 minute time frame. Yeah, but we're trading on the 1 minute, Raj. So, and there's not even a sell zone on the 5 minute. So I don't understand. Um, Go back into the back office again. Look at the trainings again, because there is no sell zone there. It's gone now. Right. Okay. We're on the 5 minute now. Look, and parallel SAR is underneath the price. Definitely a deeper buy going on still. Okay. But whatever it says on the 5 minute is irrelevant, because we are trading on the 1 minute. We look for the 5 minute for to see the bigger picture. But we take all, you shouldn't really, it'd be good practice for you to, once we get onto the 5 minute, take take the indicator off, because it's irrelevant. We look at the 5 minute, for the bigger picture where price is actually heading towards, but we take our trade and our indicator is only there for the 1 minute. So I was, in hindsight, I was too cautious, but at the same time, I got 1%, and I'm happy with that. I don't feel I've missed out on anything. I've protected my equity, and I ended up with a 1% profit. And that I kept my powder dry for another time. So with that being said, guys, it's there we go. There we go. I was too cautious, and I indeed would have got my 2%, but I got 1% because of my cautiousness, because of recognizing we had a nervous, rangy market. But the volume has opened up a little bit, and we got more trending. But that's hindsight. I wasn't to know that. Perhaps I should have been more trusting of my indicators, where I know I have anywhere between a 65 and 70% win rate, but I wasn't in any of the buy or sell zones. It was trading without that. And I recognized the rangy market there. So I thought, you know what? Be cautious not to push it. Take the money there, which I did. And you don't get broke by taking a profit. And because of the market conditions, i.e., like I said before, rangy, nervy market, it just happened to open out at this time. But there's no indications for me to say that would actually happen. But it did happen, and that's hindsight. And I'm quite happy with the money that I took. So, with that being said, guys, hope you get a little bit of experience of what's going on. And we will see you later on tomorrow, maybe. So, thanks very much for being on today. I do appreciate you being here, and we'll speak soon. Cheers for now. Bye.